Hi, I'm Paramita and my total income is less than 5 lakhs. Hence, I don't have to pay any tax. La la la.
Hello, my name is Indrakshi and my annual income is 5 lakh 100. So I just have to pay tax only on rupees 100, but that's pretty less. Ting 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 ting.
Paramita, since your total income is 5 lakh, you get a rebate under section 87A. That's why you don't have to pay any tax. But Indrakshi, since your total income is more than 5 lakh, you don't get that deduction, you don't get that rebate. So your total tax liability will be 12,520 rupees only.
But I just earn rupees 100 more than what she is earning as an annual income. So how come I have to pay 12,500 as a tax liability? That's pretty sad. I guess you have skipped your maths classes.
I didn't skip my math classes, probably Nirmala Sitharaman did. So you can reduce your tax liability to zero by doing proper tax planning or by subscribing to Debit Credit Nation. Thank you.
Guys, what are you waiting for? Go and subscribe to Debit Credit Nation! Yeah!
What is up, guys? My name is Shoubhadro and I welcome you all to Debit Credit Nation. And today we'll learn how to save income tax legally. In today's video, I'm mostly going to focus on salaried person because their employers deduct their TDS upfront, but businessmen, professionals, they can manipulate their net profits and they can pay less tax and they can get away with it. If you are a fresher, just joined a company with the designation of associate or senior associate, you might find out that your monthly take-home salary is equivalent to 1/14th of your CTC. Now gradually, once you become a manager, your monthly take home becomes 1/18th of your CTC. So that means you can take home 2/3 of your salary and the 1/3 you're paying to government as tax. Of course, that also includes your provident fund contributions. In order to reduce tax, we need to do proper tax planning, and tax planning includes two components: exemptions and deductions. Now many of us uses exemption and deduction interchangeably, but these two are separate concepts. Let's understand what are the difference between exemptions and deductions. So exemptions are those kind of incomes on which government won't charge any tax. For example, agricultural income, share of profit from a partnership company, dividend from Indian company, not anymore. Previously the dividend from Indian company used to be an exemption, but that exemption was lifted a couple of years ago. Whereas deduction refers to certain kind of expenses or investment which government of India encourages us and they let us to deduct it from our gross total income. Example of deductions are LIC premium, buying mutual funds, like that. So let's start with exemption first. Now in this video I'm going to discuss about a lot of exemptions and deductions. Many of them are popular and there are still few items which are yet to be explored. We are going to talk about those unexplored, unorthodox deductions and exemptions as well. So we'll start with HRA, house rent allowance. Who can claim HRA? Any salaried person whose employer offers house rent allowance in their CTC. Condition number 2, that employee needs to stay in a rented house. Now currently what happens, many of us are living in a joint family, so we live with our parents. Now since we live at our parents' house, can we pay rent to our parents? Obviously we can pay rent to our parents and we can claim deduction for HRA. Now there is a catch. Previously most of the companies used to ask for rent receipt, where we used to get a signature from our parents and we used to produce it as a rent proof. But nowadays most of the companies also ask for the rental agreement, which we generally don't do because we stay at our parents' house. Now let's talk about how much can we claim as HRA. The entire HRA that we receive from our boss? No. The entire amount that we pay as rent? No, not always. Now let's find out what is the amount of deduction. So HRA deduction is list of the 3 following items. So number 1, the amount of HRA received from your employer. Number 2, 50% of your basic plus DA if you stay in a metropolitan city like Delhi, Mumbai, Kolkata or Chennai, and 40% of basic plus DA if you stay at any other city. And finally, excess of rent paid over 10% of salary. Now let's do a live example of HRA calculation. So suppose your basic salary per annum is rupees 8 lakh, and nowadays in private sector there is no DNS allowance, but still I'm assuming that you are getting a DNS allowance of say 50,000. Next, you can check your offer letter how much HRA you are getting. I am putting 3,60,000 as my HRA. Now next you have to mention how much rent you are paying. Suppose I am paying a rent of 15,000, so 15,000 into 12 comes as 1,80,000. Next you have to mention which city you live in. Suppose the assessee lives in say Kolkata, so he is living in a metro city, so yes. Now let's calculate the HRA. So you can see out of the total HRA of 3,60,000 you can get exemption on 95,000 and you need to pay tax on 2,65,000. So my first question, do I get exemption on the entire HRA? No. In most of the cases you won't be able to claim exemption on the entire HRA. So in this case we could save almost 1 lakh and the rest 2,60,000 we need to pay tax. My second question was, am I able to get exemption on the entire amount of rent paid? So what amount did I pay as rent? I paid 1,80,000 as rent, but I am getting a deduction up to 95,000. So here also the entire amount of rent paid cannot be claimed as exemption. Now let's tweak this figure a bit. So I'll click on calculate again. Now let's say I pay a higher amount of rent. Suppose my monthly rent is 25,000 because I stay in, suppose I stay in Mumbai. My annual rent becomes 3 lakh, that is 25,000 into 12. So I am entering 3 lakh and I am clicking on calculate now. Now you can see I am actually able to save most part of my rent paid. So I am paying a rent of 3 lakh and I am getting an exemption of 2,15,000. So only 85,000 I could not save. So out of the total HRA of 3,60,000 we get an exemption of 2,15,000 and for the rest amount of 1,45,000 we need to pay tax. Now how to use this website, I am going to add the description of this website in the link. You can click on that link and you can check your own HRA exemption. Exemption number 2, Leave Travel Allowance or LTA. Who can claim LTA? If you visit domestically within India, you can reimburse your travel expenses. So travel expenses mean only the fare that you pay for air travel, travel via bus or train. You can visit with your family and the entire amount you can claim as a deduction for LTA. LTA can be claimed twice in a block of 4 years. Now the condition is you cannot claim the expenses for sightseeing, food or your hotel stay, and obviously your employer needs to specifically call out the leave travel allowance. It cannot be a special allowance, it cannot be a generic allowance. Leave travel allowance should be called out specifically in your offer letter. Exemption number 3, mobile and internet allowance. Now due to COVID, most of our employers allow us to work from home and they provide extra allowance for internet and mobile recharges. Now this is one of the unexplored exemption that we people don't use, because when employer gives us allowance with respect to mobile data charges and talk time, if we don't submit the bill and we don't claim the exemption, we are losing money. So if you get such kind of allowance, go submit your bills, submit your Wi-Fi bills, your data bills, your talk time bills and claim that deduction. So even if you get an allowance of 1,500 a month, so that becomes 18,000 throughout the year. The fourth allowance is also an unexplored one. So due to COVID, many a times our employer provides us COVID allowance or furniture allowance, like they pay us money to buy ergonomic chair or to set up work from home infrastructure with their money. Now whenever you spend those money, you can claim exemption to the extent of the amount that you have actually paid to set up your work from home infrastructure. The next exemption in our list is something that we also skip out. So our employers also provide us food coupon like Sodexo or food voucher, which we don't claim. So basically many a times our employer provides us this food coupon, but we prefer to have it encashed. But if you encash, you lose out those exemptions. Now if you take it as a food coupon, those food coupon can be claimed as an exemption to the extent of 26,400 per annum. Next exemption in our list is relocation expenses. So relocation expenses is not something that you are going to get every year, but whenever employer wants you to relocate from one city to another one, probably close to your client location, then maybe the employer provides you certain allowances. For example, expenses for moving out all your furniture for movers and packers, or your own travel, your travel with your wife, airfare that you pay to travel with your family. And also employers also provide you an allowance to set up in your new location, to get settled up in your new location for the first 15 days. So whatever amount they pay, the employer pay, please try to get them exempted from your total tax liability, because those allowances are also exempted. There is no limit that government has declared, so whatever amount we receive for relocation, the entire amount is fully exempted. Next exemption is quite well known. It is children education allowance and hostel allowance. For children education allowance, you can claim an exemption for up to 2400 per annum, and for hostel allowance it is 7200 per annum. But obviously this is applicable for maximum 2 children. Next and last reimbursement in today's list is car expenses. So if your employer pays money to meet up your fuel expenses, daily fuel consumption, then you can claim those amount as an exemption. Now as per the law, these expenses are paid to you for both official and private purpose. Now the income tax official will never check whether you have entirely used your car for official purpose or entirely for private purpose. So whenever you get such kind of allowance, you just need to submit your bills, like purchase bills of petrol and diesel, and submit to the company, and you can claim that exemption. Let's move to the deductions next. The first deduction in today's list is the most popular one, that is a deduction under section 80C. Now government of India encourages us to make some savings or investment for our retirement life. Now government allows us deduction to the extent of 1,50,000 per annum on some expenses or investment. The list of such expenses or investment are payment of LIC premium, investment in public provident fund, investment in national savings certificate, investment in NPS, investment in tax saving mutual fund, those are called ELSS, equity linked savings scheme, investment in post office savings deposit, and obviously for employee, the own contribution to employer's provident fund. So the deduction under section 80C is your total investment on these funds or 1,50,000, whichever is lower. Deduction number 2, national pension scheme. So this is not that much popular compared to 80C. Now as you grow through your careers, many a time people will observe that their deduction limit of 1,40,000 under section 80C gets exhausted. Now they want to invest more, but at the same time they won't be getting that benefit because the entire 1,50,000 has been exhausted. Now Government of India allows NPS contribution under section 80 CCD. So whenever you make any contribution to NPS, you can get a deduction up to 50,000 over and above that 1,50,000 limit. Now there are few conditions available for this one. Number one is whatever amount you pay towards NPS tier 1, only that part is qualified for this deduction. Now under section 80 CCD, there is another unexplored deduction option that we many a time miss out. That is under 80 CCD also there is another option that you can ask your employer to pay 10% of your basic and DA for NPS contribution. Now this is over and above of 1,50,000 and 50,000. So you have already exhausted that 2 lakh limit of 80C and 80 CCD, and beyond that you can ask your employer to pay 10% of your basic and DA, and there is no such limit. For example, if your basic and DA comes to as 10 lakh, that means 10% of 10 lakh, that is 1 lakh your employer can contribute towards NPS. Now your total deduction can be 1,50,000 under section 80C plus 50,000 under section 80 CCD for your own contribution, and again 1 lakh under section 80 CCD for your employer's contribution. So you can claim 3 lakh in a financial year for these 3 investments. Next deduction is pretty common among all the assessees, so it is not specific to any employee, any any self-employed person, any businessman or any professionals can also claim this deduction. This is deduction under section 80D. So this is for Mediclaim premium. So whenever you pay any Mediclaim for yourself, your spouse, your family, or for your parents, you can claim a deduction. Now Government of India encourage us to take care of our parents. So whenever we buy any Mediclaim, we pay any premium for our parents as well, we can claim deduction. So what is the amount of this deduction? If a person is of less than 60 years, he or she can claim maximum 25,000. Now for his or her parents also, that guy can also claim another 25,000. Now if the assessee is a senior citizen, he can claim 50,000 maximum, and their parents is also a senior citizen, then also another 50,000 is allocated. So maximum 50,000 plus 50,000, that is 1 lakh can be claimed under section 80D, but this is the maximum amount. So the deduction amount is the maximum amount and the actual amount of premium that you pay, whichever is lower. Okay, so if you are not a senior citizen but your parents are, you can claim 25 plus 50, 75,000. If you are a senior citizen and your parent is also senior citizen, then you can claim 50,000 plus 50,000, 1 lakh. And on top of that, Government of India encourages us to go for preventive health checkup, and it is also a good initiative. For preventive health checkup, we can get a 5,000 deduction on top of it. So the total deduction under section 80D can be 1 lakh plus 5,000, 1 lakh 5,000. Next section is 80DD, Dawa Daru. So 80DD is an opportunity for us to make the best of the deductions. So what it covers? Now if you have a dependent parent or any family member who is dependent on you, but he or she is disabled. Example of disability can be low vision, blindness, hearing impairment, or mental retardedness as well. Now here is the catch: you need to spend some amount of money on your parents or your grandparents' disability, and whatever amount you pay, you can claim straight away 75,000 as deduction. Even if you keep a nurse, for that nurse you're just paying say 5,000 per month, that is 60,000 per annum, you can straight away claim 75,000 as deduction under section 80DD. If the disability is severe one, that is more than 80%, you can claim straight away 1,25,000 per annum, irrespective of the expense that you actually pay, the amount that you spent on that disabled person. The only catch here is you need to get a certificate from a neurologist saying that how severe that disability is, whether it's less than 80% or more than 80%. Next deduction is interest on home loan. This is covered under section 24 subsection B. So if you have a home loan and you are paying the EMI, you can claim deduction for the interest component of it. The maximum deduction that you claim is of 2 lakhs per annum, and the principal component of it can be covered under section 80C, so that is covered within the limit of 1,50,000. So you can claim both the deductions of your EMI, the principal amount under 80C for 1,50,000 and the interest amount under section 24 subsection B for 2 lakh rupees. Now here is the catch that no one will talk about. There is one more section, that is 80EEA. If you borrow money under this scheme, that is affordable housing facility, then you can claim an additional deduction of 1,50,000. So your total interest deduction can be claimed is 3,50,000, 2 lakh under section 24 subsection B and another 50,000 under 80EEA. There are certain conditions to be eligible for 80EEA. The conditions are this has to be your first home, and also the second condition is the house that you are going to buy has to be less than 49 lakhs. Next we have interest on education loan. So if you borrow money for education purpose, the principal part of it won't be eligible for any deduction, but the interest that you are paying are eligible for deduction. Now there is no upper limit, so whatever amount of interest you are paying for your education loan, the entire amount can be claimed as a deduction, and obviously such deduction is available to the borrower only. Now if your parents have taken this loan for your education, only your parents can claim the deduction. You can claim the deduction that you are going to take on your son's or daughter's education purpose. If you are planning for a car loan, go ahead and buy a electrical vehicle, because government of India says that if you take a loan to buy a electrical vehicle, be it 2-wheeler, 3-wheeler or 4-wheeler, government allows us a deduction of 1,50,000 towards the interest component of the loan, and there is a specific time period within which you have to buy, that is 1st April 2019 to 31st March 2023. For those people who don't get the house rent allowance, that is HRA, or who are not employed, who are self-employed or in a profession or in a business, and you guys cannot claim house rent allowance under section 1013A. Now for those people we have a section called 80GG, that is Gautam Gambhir. So you can stay in a rented house and you can claim your rent as a deduction under section 80GG, but in most of the cases such deduction can be 60,000 per annum. If you have a savings account in a bank, you can claim deduction under section 80 TTA for a maximum of 10,000 for the interest that you get from savings account. But for senior citizen there is a catch. Now no one is going to talk about this one, this is still unpopular. Now for senior citizen, this section is, the equivalent section is called 80TTB. It covers an amount of 50,000 per annum, and it also considers not only savings account, it considers fixed deposit and post office savings account as well. Now for 80TTA, that is person with less than 60 years, even if they get any amount from fixed deposit, that amount is taxable. That is not covered within that 10,000 limit. The 10,000 limit is only for savings account. But if you are a senior citizen, you get a limit not only of 50,000, but that limit also covers fixed deposit interest and post office savings interest. Now here's the catch that you need to do. You can open a fixed deposit for your, in the name of your parents who is a senior citizen, and that entire amount of 50,000 of interest per annum will be exempted under section 80 TTB. The last tax saving hack that I have for you is neither a deduction nor an exemption. It can be achieved by filing your losses. Now in income tax there is a concept called set off and carry forward of losses. So what that means, so for the current year, suppose I have a loss from a business that I want to set off in the next year. So what do I need to do? Suppose I have a loss of rupees 20,000 this year and I don't have to pay any tax. Now next year, suppose my total profit is 1 lakh. Now instead of paying the tax on the entire 1 lakh, I can adjust this 20,000 and I need to pay taxes on only 80,000. Let's see how can someone use this strategy of set off and carry forward of losses to his or her advantage. Now in an example, suppose a person incurs a loss of 40,000 in the current financial year, that is 2022-23. As you know, there is a recession going on, people becomes impatient and they sell off their stakes. Suppose Mr. A sold off his stakes at a loss of 40,000 in the current year, and that is a capital loss. He includes that capital loss in the income tax return. Now in the next year, suppose he sells off his car and he gets a profit of 30,000, and now he has to pay tax on this 30,000. What he can do, he can carry forward the loss of 40,000, the 30,000 part of that loss he can carry forward this year, so his total taxable income becomes 0. Now out of the loss of 40,000, he just utilized 30,000, he can still utilize 10,000 more. So suppose a couple of years later he gets another capital gain by sale of say a furniture. So in that 5,000 profit, he can adjust another 5,000 of his loss, okay, and also he doesn't need to pay any tax. Now how much has he utilized? So out of 40,000 he has already utilized 35,000, so he has 5,000 left. Suppose in the next year he earns a profit of 8,000 from another capital gain, the rest 5,000 he can adjust and his taxable income becomes 8,000 minus 5,000, that is 3,000. So what is the benefit? If you disclose your capital loss or any kind of loss from any of the head in the income tax return, that loss can be used in the future years. The loss can be carried forward in the next 8 years, thereby reducing your tax liability in the next years.